Right. Hello, everybody, and welcome to today's Money Talk Tuesday, focusing on veterans benefits. My name is Daphne Gluck, and I'm happy to be here to present this Money Talk Tuesday along with our partners, Mr. Steve Croto from the Veterans Bonus Division, Mr. Dan Ferris from First Command, and Mr. Rick Betancourt from Caliber Home Loans. Before we start, I'd like to go over a few housekeeping matters. So this is a Zoom webinar. It will be recorded. The recording may be uploaded onto public websites for future use. Any information shared to us through the question Q&A function is anonymous, but note that the chat records are not anonymous and they are subject to public records laws. We're also streaming live on Facebook in our account at Veterans Bonus. So you can also watch us over there. This is a webinar, you will not be able to talk to us or use the microphone. However, you can communicate with us using the chat or the Q&A function. And if you're viewing us on Facebook, you can submit your questions using the comments function. And before we start, I'd like to share with you a short welcome video from Treasurer Deb Goldberg, and then we'll move on to review our agenda for today.
Hi there. This is Deb Goldberg, your Massachusetts State Treasurer, and I want to welcome you to this event today. You know, we in Massachusetts have had a long history of true appreciation for our veterans and our veterans' families, and for good reason. People who are in the armed services are really putting themselves out to protect all of us. And I can't even begin to tell you personally how much I appreciate it, as does everyone that I work with in my office. So we've tried to make time to let you know all the things that you can use in order to make your life better. You know, we understand the unique challenges that so many service members and their families have to confront, particularly when upon returning. And that's why we make the Welcome Home bonus available. And in fact, in the last couple of years, we've made it even easier by having online applications in order to expedite and get things moving more quickly. But even this year, we've had an extra bonus for members of the National Guard who've had to deal with the COVID-19 issues. But the whole idea behind all of this is that we want to show appreciation. We want to be helpful. We want to provide resources and let people know we care. So in particular, the day before Veterans Day, and I'm the daughter of a former naval officer, I know, and I want you to know, that we all thank you for your service and everything that you have done. Thank you.
Thank you. And so our agenda for today, we're going to start with a review of the Veterans Bonus Program and the new Armed Forces Expeditionary Medal Bonus. That will be presented by Steve Croto. And then we'll move on to our panelist presentations from Dan and Rick. Finally, we'll have time for open discussion and Q&A. I encourage you to send your questions throughout the presentations. If we can address them throughout the presentation, we will, and otherwise we'll just leave them to the end, and we'll try to answer everything in the Q&A session. And at this point, I will move the stage and have Steve present.
Great, thank you. Welcome, everybody. I'm Steve Croto from the Veterans Bonus Program. I will be briefly going over the program and the bonuses and introducing a few new bonuses. Please take note of the contact information. So if you have any questions, feel free to contact me there. Next slide. The Veterans Bonus Program is a program where the state of Massachusetts awards a bonus to military members that are originally from Massachusetts that served during a wartime period. A lot of people are not sure what it is, but that's it. So it's a wartime bonus for people from Massachusetts that served during a wartime period. Next slide, please. Here's the history of the bonus. A few items I'd like to emphasize. One is the bonuses are all governed by laws, state laws. So when we need to make changes or people have requests, it's a state law, so we need to request from the legislators to amend the law. And the legislators, they're always looking to help out veterans. Also emphasizing that it's all during wartime periods. And next slide, Bill, please. All right, I'd like to introduce the newest bonus, which is the Armed Forces Expeditionary Bonus. Now, this bonus came about from veterans that served not during wartime, but served during combat operations. We had a lot of inquiries about this, and a lot of people wanted to see if they can get a bonus for their combat service. So we were able to work with the legislators to pass this bonus. A few things about the bonus: who's eligible. Like the other bonus, you had to live in Massachusetts before entering the military. One thing I'd like to comment on that is if you or the member has documentation, you provide a copy. But if you don't, we can research and contact the City Hall if needed on our end. So if you have documents showing, like a high school diploma showing you lived in Mass before going in the military, you can use that. If not, we'll take care of it. What is it for? It's for participation in a combat operation, not during another bonus period. So that covers the mainly 1976 to 1990 and 1992 to 2000. So it's a pretty big gap of quote unquote peacetime. But as you'll see in the next slide, there's a lot of operations that popped up during those times. And also they have to show the Air Force Expedition, the Armed Forces Expedition Medal on the DD-214 AFEM. Most of the time it's listed on their DD-214. That's the only documentation really required. And honorable service like the other bonuses. How to apply? We currently don't have the AFM bonus online application yet. So in the meantime, use the GWA application, and I'll show you that at the end of my presentation. Next. Here's just a quick snapshot of the operations that were eligible for the Armed Forces Expeditionary Medal. Just take a look at some of the dates. You can see the dates fall outside of those, the bonus periods from, definitely before 2001 and 1990, 91. There's some that overlap, but, we'll figure that out when that situation arises. Next slide. The other new bonus is the Massachusetts COVID bonus, $500 bonus to Massachusetts National Guard members that supported the Massachusetts response to the pandemic. We were able to waive the residency requirement for this bonus, and documentation, if it's not available, we can verify it with the National Guard. And how to apply, we do have an online COVID bonus application. Next slide. Real quick, this is the GWAT. Some of you may or may not be familiar with it. $500 for 6 months active service after 9/11/2001, $1,000 for your first imminent danger location deployment, $500 for a second imminent danger location deployment, and $250 for a supporting deployment not in a imminent danger location. And then $1,000 plus any unpaid bonuses to Gold Star families that of service members that passed away during that time frame while on active service. Next slide. Here are the older bonuses: the Vietnam, Korean, and World War II. Korean and World War II, most of those have been awarded. So with some of those funds, we were able to support this new AFEM using some of those funds that were originally for the World War II and Korean War bonuses. Vietnam bonuses, most of those have been awarded as well. But there is a gap, 1972 to 1975, where a lot of people didn't get the bonus. So if you or somebody that served in the military after 72 and before May 75, you might be eligible for a bonus. Next slide. We also have a bonus for deceased veterans. So if a veteran passed away after their service and didn't get the bonus, the family members are eligible for the bonus. Or if the veteran passed away while on active service during one of the bonus timeframes, the family is eligible for that as well. Next slide. All right, applications. We try to streamline it as much as possible. Right now, it's preferred to do online because online is quicker. We're working from home a lot of time. So complete the application, provide residency before you went to the military, if available. If not, we can do the research, and provide a discharge or military service documentation. And submit online or by mail or in person. Next slide. There's also an appeal process. So if you don't agree with a decision, you can always appeal it. And for veteran organizations, if a member doesn't seem like they qualify, you can still ask them to apply, and we can determine if they're qualified or not. And if they don't agree with it, then they can appeal. Next slide. All right, this is a screenshot of our landing page. So for the AFEM bonus, currently, click on the Welcome Home Veterans bonus. And then for the COVID, it's on the bottom, select the COVID. We received about 1,800 COVID bonuses since September 18th, and that's more than we normally receive in a year. So we are busy processing those bonuses. And if you have any inquiries, there's an online inquiry, the second block up top. You can always submit an online inquiry. I think that's all I have on my portion. Feel free to reach out to me with that contact information or with the chat or questions and answers. Thank you.
Thanks, Steve. And at this point, I would like to move on to the presentations from our panelists. So first, we will have Mr. Dan Ferris from First Command Financial Planning, and then Mr. Rick Betancourt from Caliber Home Loan. So I will stop sharing and let Dan share his screen. Here we go.
Good afternoon, everybody. Should be sharing now. The presentation we have. Dan Ferris. I'm originally from Mass. I did 20 years in the Army. Spent most of my career in the Rangers and some special mission units. And after I retired, I moved back to the community with my family, and we're growing roots back here in Massachusetts. So as a financial advisor, there's really kind of three main cornerstones I focus on for folks. There's an insurance cornerstone. Think of it as a foundation of a house. There is the savings cornerstone, which is the nails and the glue that hold the house together. And then there's the investments cornerstone, and that's really the house we're building. And today we're going to really focus in on that savings cornerstone as we go through here. So hit the next couple slides fairly quickly, but like, hey, why does financial instability, or why does having a savings plan and having a solid savings cornerstone matter? And really, as you look at the different factors, the financial instability creates all this additional stress on everything from family relations to actually our physical and mental health. I was Googling the most recent cause of divorce, and financial matters account for at least 22% of divorces, depending on how many other factors are involved. And so these are a lot of things that we don't want to be happening to anyone really, but especially to our veterans. So that's why it's important. In my personal experience of just life experience, and also just in general, it's, hey, why do people fail to plan their finances? And you have all these different reasons, and people probably heard them. At the end of the day, it's just getting started is the hardest part. And so a lot of times we just need to get started, and actually it's the smallest step. A 1,000-mile journey starts with one step. A lot of times we can convince ourselves a million reasons why I'll start tomorrow, I'll start next week, I'll start next month, or whatever it may be. And then the last piece is here, but life never gets simpler. It always seems to get more complicated. I know I'll speak, that's what my life is like, but that's why the problem with waiting is there's never the right time. So we always want to make sure that we get started and start doing the right behaviors as soon as possible. So I look at this slide and why did I pick this slide here? For those of us who served, we plan, right? And we backwards plan in the military. So we want to know where our goal is, and then we backwards plan back through that for the military decision-making process. So you look at, hey, what's making honest self-appraisal and decide to change for the better? that's mission analysis. That's what we used to do when we first get a mission. We look at, hey, where are we trying to go and what are we trying to do? And that ties directly into the establishing goals part. That is where we restate the mission at the end of mission analysis, and we know where we're driving towards and what we're trying to accomplish. And then if we go back to the troop leading procedures, as you look at, you receive the mission, issue a warning order, make a tentative plan, and then you develop that plan out. That's here and commit to an organized plan. And then we initiate movement, and that's getting started. And so it's a little cheesy as I bring the military stuff into it, but it applies even now that we're out as veterans. These are things that we can still continue to do and frameworks that we have available to us that we're familiar with. But really this middle one, this establishing goals, that's what I've personally found is the most important thing. How do you know you're headed in the right direction if you don't know where you're going? So being able to kind of clearly articulate what your goals are is really important. And so that's where I break it down into kind of 3 categories for your goals. There's short-term, and maybe into intermediate kind of generally fall into the savings cornerstone. And then everything that's more of the 5 years out and more, that may potentially fall into the investments cornerstone, depending on what your personal situation and your personal goals are. But if you've ever heard the acronym SMART, these are the type of goals we want to have: specific, measurable, attainable, realistic, and time-bound. So for example, if I want to buy a new car next year, hey, I want to buy a new Ford F-150 pickup truck in May of 2021. It's going to cost me $28,000. I need to be able to secure financing for that. Or I want to buy a home in 3 years. I need a 20% down payment. Or maybe I don't because I'm going to use my VA home loan. What are all the different factor pieces that tie into that? And I know Rick's going to talk about that a little bit more later. But so they're just really being able to, if you use this kind of acronym, it can help guide you, just similar to like the 5 W's that we used in the military. Budgeting and spending. Why is this important? Why do we care? It's really, I'm a little OCD, and I know where every penny my family spends every month goes, right? And part of that's just the natural piece of being a financial advisor. But it really, at the end of the day, is if you don't know how much money you have coming in and then what you're spending every month, how do you know if you have any left over? And where is that money going? Or do you realize, when I started tracking my Dunkin' habit, I realized how much money I was spending on Dunkin' every month, and I cut back a little bit, right? Because I was like, oh, wow, that's a lot of money. Or maybe, or how much did we spend on Amazon last month? And can I point to anything that we bought? But tracking the budget and having a spending plan is one of those ways where you can really see where your money's going and then make sure it's going to the right things. So that's one of those baseline pieces that you want to have. And I also wanted to say, a lot of what I have the hardest and the easiest job, because some of this stuff is very basic. And everyone's like, yeah, of course, no kidding, Dan. But I'm amazed as I work with people and I meet people, how many people don't do this stuff, or they don't, or they do it to some level. There's a lot of great tools out there. There's Minted, there's banking apps now, depending on if you're online banking, that will do a lot of this budgeting and spending for you. It's just a matter of using it and figuring out how it works for you. And then I don't like to read slides, but overall, we want to have a budget and a spending plan and know where our money goes, because right here, we want to decrease our indebtedness and we want to increase our savings. That's what, at the end of the day, that's the goal of doing all these pieces here. I'm going to go on to the next slide. All right, this one, it can come across wrong. I'm not lecturing anybody, but it's need versus want. And we have an entire society, and between social media and marketing, where they have studied our brains and they understand how we respond to things. And we have this, we have all this, we're inundated with, you must have this, you must have that. And so it really comes down to is a need versus a want. Like, yeah, I'd love to have a Ferrari. That's more of a want, but what do I need? I need a reliable car that gets me to and from work. And maybe that Ferrari is a goal for later down the line, but in the short term, maybe I need to do something different. I like this slide right here for how much should I spend, because it gives you, it's something you can reference. And so right at the top 2 there, savings, ideally 5% of what we make every month should go to savings, and ideally 10% goes to investments. And then you look at the breakdown of the other things. I think this can be a very helpful guide as you look at your own finances and do the analysis of, well, how much am I spending on debt? How much am I spending on personal care and clothing? Am I putting anything towards investment, anything towards savings? And I really like to recommend thinking of savings and investments as just other bills that you pay every month. So you're paying yourself first and your future self to make sure that you have the resources you need. Because ideally what we do is we build up this savings here with 5%, and then that frees up this 5% to debt because we're not paying off credit card balances or other loans. We've freed up where we're now just using the money we make to do what we want with. Live within your means. This is a little bit repetitive, but I laugh, like this last bullet here, don't worry about the Joneses. I'll tell a quick story. When I was a brand new lieutenant in the Army, I started investing and saving right away. And I had 3 buddies that would tease me every 4th weekend because I would had invested and I had saved and I didn't have any money to go on a road trip or go up to the bars or do whatever. And they were teasing me about like, hey, whatever, man. Hey, you should be coming with us. Just put on the credit card. I'm like, no, I'm good. But there's a lot of peer pressure to do those things or look at what does my neighbor have or whatever it is. What is the peer pressure of what I must have? It's really important to kind of self-meter ourselves on those things. Because actually those 3 guys used to give me a hard time back when we were in our early 20s. They're all clients of mine now and we're trying to catch up for all the investing they didn't do when I was doing it. So it does come around, but you see someone else that has something else they want, you don't know, maybe they're not saving for anything. Maybe they're spending all their money every month. So don't worry about them and those pressures. It just matters what works for you and what your personal financial goals are and how you're pursuing those. So paying yourself first. The things I wanted to highlight in here is really trying to focus in on the short term and then the overlap into the intermediate goals. We want to have an emergency fund. I define an emergency fund as 3 to 6 months worth of monthly expenses, not just 3 to 6 months worth of the mortgage payment. What are all the bills? What if we lose our job or if we have something like what happened this year in COVID and like we're laid off and maybe next time there isn't the unemployment pieces and all the pieces, do I have enough money that we can continue to live our life how we want to for the next 3 to 6 months and overlap this? And then there's all the other factors depending on what unique pieces you have to your personal life that need to add it. My wife and I have a rental property that we manage. We need to have rent for that in addition to our normal emergency fund for our personal selves in order to make sure that if that goes unrented, that we can still afford to pay the mortgage without putting ourselves in debt. And then the other one I really like to think about is like saving for a home. Like no one wants to throw their money away on rent. So what do we need to do to save for a home? It's not always just saving for a down payment, especially if we don't need to use a down payment, but you move into a home and you want to have the money available to do those little renovation projects that come in. So where maybe you don't have to do a down payment because of VA home loans, but now you have the money in order to be able to do, change out the floors or change the rugs or whatever it may be that pops up when you move into a new home. And so there's different ways you can do that. As I talked about the emergency savings, this is a dedicated either savings or money market account that the money goes into there for unforeseen expenses like the car radiator goes out or you need new tires or the water heater breaks in the house or whatever it may be. These are the things so that you don't have to put it on a credit card. In an ideal world, you contribute a little bit of money into it every month so that you can make sure as something comes up and you use some of that money, you have an automatic system where it's replenishing and you don't have to redo your entire budget every month that you have to use it, and it's replenishing itself. The other part here is that we talked about is we want to get away from the alternatives that are down here. Getting a pay advance, you see that in the military, you don't necessarily see that out in the civilian worlds, but personal loans, the title loan folks, and or you relying on credit cards. I'm not saying that credit cards are all bad. I have some credit cards. We use them, we pay them off. We don't carry a balance on them. That's the ideal situation to be in. But ideally, we want to have the money where even if we have to put it on the credit card for the actual purchase that we have to make, we're then able to pay it off so that we keep our money working for us and we're not making some other company or someone else rich. And then if you have other goals like the home renovation budget or a vacation budget, there's different ways you can do it. You can put it all into one account on top of your emergency fund. You can have different accounts that are, and you just change the nickname on them in your banking app. So, you know, this one is emergency fund, this one is vacation fund, this one is the nanny fund, in case childcare is especially expensive 1 month or whatever it may be. And there's a lot, I've only mentioned money market account and savings accounts so far, but there's other short-term things you could do. You could do short-term CDs, which will get you some interest rate, but still be fairly liquid. There's other accounts like high yield savings accounts. Those are great. They have a higher interest rate than a normal money market or savings account, but they come with a higher minimum balance requirement. So it just kind of depends on what each person's individual financial situation is and what you can do. I'm going to wrap up here relatively quick. I just want to go through credit a little bit because I know Rick's going to talk about it at the end. So at the end of the day on this slide, two things. The second bullet here, and this is just, if you had a balance of $5,000 in your credit card and you had 18% interest rate and you were making the minimum payments, if it does take you the full 40 years and you're not able to make any extra payments, you're going to pay almost over $13,000 in interest on that $5,000 principal. So that's just where I say, like, credit cards aren't bad, but understand what happens when, make sure you know what happens when you're only making the minimum payment. You're going to pay a lot of extra money on that principal. And then also just from a credit score, credit history perspective, we never want to owe more than 20% of our net annual income on credit. That's just where we start to get into to challenges with our credit score. The credit report is your entire, everything you've ever done credit-wise. Your credit score is your current risk score to lenders. And so generally, you see it's anywhere between 300 and 850. If you're below 620, that's not great. If you're above 650 into the 750, that's good. And anything above 750 is great as a general rule. And then this is how your credit score is calculated. They look at your payment history. How many late payments do you have? How long ago were they? And all those different pieces. How much outstanding debt do you have? This is where they look at how much debt do you have versus how much income do you have, and they do a calculation. When you start getting over 40% for a debt to income ratio, they're gonna be starting to look at as higher risk. How long have you been building your credit? So this is something that's harder for young people. If you're 21, you've only been building credit for 3 years, you don't have as long of a credit history. If you're in your 40s like me, you have a 20+ year credit history. So that factors into it. How many accounts do you have? And then how many inquiries have come on your credit report? So they're looking for, are you constantly applying for new cards? Are you rolling over balances all the time? Are you doing debt, what they call debt seeking behavior? These are all things that can factor in. The last thing I wanted to highlight is sometimes people, length of time have been building your credit, people will, like, they'll run up some credit card debt, they'll pay it all off, and then they'll cut up the card and close the account. You don't want to close your account on your oldest account, as in the account you've had the longest, because that's your credit history. So even if you decide not to use that credit card anymore, don't cancel it and close the account, because then you lose all of that credit history from wherever you started up until the point where you have a new card. The example I'll give is I have a Bank of America credit card. I got it in 1998. I don't ever use it. And then once every 2 to 3 years, they email me and tell me they're going to close the account. So I go and I buy a tank of gas on it and I pay it off. But if I get rid of that card, I will cut my credit history in half. And so that's why I maintain that card. Finally, why does all this credit score, credit history matter? And I'm going to hand over to Rick here in a second. Interest rates on loans, student loans, car loans, home loans, as well as how much you can get for a credit card balance, gas card, retail, all that. If you have a low credit score, they're either going to not give you the card, or they're going to make the interest rate so much higher that you're paying that much more if you carry a balance. So it all factors together. And then, sorry, Rick, one last piece here. Okay, debt reduction schedule. If you do have credit card debt, there's different ways to pay it off. You can look at, hey, what's my highest interest rate? Pay that off first, as much as possible, only making minimum payments on that one, and then transition to the next one down and pay it off that way. You can look at what's the smallest balance, pay off the smallest balance first, and then work towards the biggest. or you can do biggest first and work towards the smallest. The last thing I'll say, consolidating debt consolidation loans. They used to have a really bad rap because what would happen is people would have a lot of debt, they'd take out a loan, they'd pay off their debt, they'd be paying the loan payment, and then they'd run their credit card debt up again. So if you've made if just life has led you to have a lot of credit card debt and you feel like you can't get out from underneath it, as long as you're going to change your behavior and stop using those credit cards and you're not going to run up debt again, a debt consolidation loan can be a great way to pay a lot less interest while simultaneously consolidating your debt down and paying a lesser monthly premium along with less interest. However, if you're not sure if you're going to be able to make that change, then don't get a debt consolidation loan, pay it off, still have that payment, and then run up the additional credit that you have to make minimum payments on also. I know we're going to leave time at the end, but I just really highlight set goals and then save money and pay yourself first. Think of your savings as a bill that you pay every month, whether it's $20, $50, $100, whatever you can afford. Just get in that habit of saving money. And so I think we're going to try to save questions to the end, and I'm going to hand it over to Rick. Thank you.
Thanks, Dan. While Rick is setting up, I'm going to encourage everybody to send your questions in the Q&As, and also note that we are monitoring the chat, so you can also engage with us on the chat. Rick, you're on mute.
How's that? We good?
Yep, very good.
And we should see the slideshow now. We should be able to this one. So we should, let me, is everything good? Can we see our slides?
Yep, looks good.
Great. Hey, everybody. So I want to thank the Office of Economic Empowerment and a great handoff by Dan. Thank you. And Steve for you starting us off and having me here as part of this awesome event, Money Talk Tuesday. So I'm going to give you guys a real 30,000-foot view of what I consider one of the top 3 veteran benefits that our military gets with their service requirements. And obviously it's the VA home loan. I think number 1 being healthcare, number 2 post 9/11 GI Bill, the educational incentive that our military gets. It's just unbelievable. So this is the number 3 in my opinion, and I think it's something that is a goal to kind of talk about what Dan was talking about. This should be one of your goals. Absolutely. And so a little bit about me, guys. I've been in the business for almost 20 years. I've been working with military almost exclusively for the last 12. I'm the number 1 mortgage professional in New England when it comes to VA origination. I was the past president for the National Association of Mortgage Brokers. I served as president from October of 18 to 19, which offered me the opportunity to speak to lots of people across the U.S. On various mortgage-related issues and regulatorily speaking, legislatively. NAMB is a nationally recognized 501c6 nonprofit, so that was a great experience for me to run that organization. Talk about goal setting, Dan. We had P&L and balance sheets and the whole ball of wax, and so I think you hit on a lot of very important pieces. I sit on the MBA VA Working Committee. I was a guest speaker at the 2019 Military Influencer Conference. I am a nationally recognized subject matter expert, so I do speak all across the U.S. about assisting veterans and mortgage professionals, real estate professionals, in implementing the benefit. And I co-host 2 vlog series, Home Ownership Heroes and Military Spouse Monday, where we try to help our active duty personnel answer VA-related questions pertaining to the home loan. A little bit about us, Caliber. We're the number 2 VA purchase lender in the U.S., so we are in this sphere of military all the time. We do have a servicing portfolio of about $150 billion. So what's nice about that is 90% of the loans that we originate here, we tend to service in perpetuity, which is a nice feature to have so that mortgage isn't sold. Does it mean we're going to keep it forever? No, but there's a good chance we're going to keep it for a pretty long time. We are the U.S. Veteran Chamber of Commerce preferred lender. I actually just had a conversation with a veteran in Minnesota who had a question about a VA loan that was referred to us by the U.S. VCC. So we work directly with them. What's nice about Caliber is that we've taken the business of helping veterans to a whole new level, something that I have not seen in 20 years from a lender perspective. We have our own internal military lending division headed by an incredibly talented young man, Lieutenant Brian Burjans. He's our SVP. He's a Navy veteran. He's currently in the reserves. His wife is part of the team, and Brittany Bacher is also in charge of our national military engagement. She's a mil spouse. So we really go above and beyond when it comes to our military families. And then in part of that division, then we have our COE and our document rescue team, where we help veterans who are having difficulty obtaining the certificate of eligibility get that. So when we were asked to be a part of this, I just was so excited because of the services and the resources that we bring. We find that we meld very well with organizations like the Office of Economic Empowerment, the Treasury, because we can provide a vast array of services beyond just originating a loan. Okay. So let's talk a little bit about this incredible goal that, I think that should be one of your goals, and Dan had touched upon. Here's the basics, right? It is 100% financing, but I think it's important to, and I think Dan will agree with me, it's not free, right? Dan talked about we have to have some money when you're buying a house. There's a big misconception. Hey, I'm a veteran, I'm buying a house, it's free. Nothing in America is free, boys and girls. There's going to be a cost with a lot of what buying a house. So if you hear someone say, "Oh, I made money when I bought my house," it's not really true. There's just ways things are presented, and sometimes it's not presented in the best way. So it is 100% financing. That means there's no down payment. That doesn't mean you won't need a deposit to hold the house, or settlement charges, closing costs, and escrows to that actually have to be paid that day of closing. So it's not free. So that you should be working on saving money for the goal of owning a home, like Dan had talked about. Depending on where you are, your goal might be $5,000. It could be $10,000 if you're buying in a different state. Like New Hampshire is a much more expensive state to purchase a home because the property taxes are higher, and there's a state transfer tax, which makes it more expensive. So there's going to be this bifurcation between states. Sometimes it's more expensive. Minimum credit scores, Dan hit upon that. VA never established a minimum credit score. You'll hear lenders say, "Oh, the VA score is 620 or 640, 660. The lenders assume the risk. We lend the money, so therefore we establish the minimum credit score on a transaction. And that could be as low as 580. I've seen lenders go as 500. But regardless of what lender you're working with tells you what their minimum score is, it does not necessarily mean it's a guarantee that you're going to get the loan. There's a deeper dive into that, all the different factors that go into sort of the decision-making process. And I'm happy to do another call at some point in time to dive deeper into how that works. But just because you got a 585, and I'll tell you that I'll go to a 580, doesn't mean you're going to get the loan, because there's other issues that we have to address, other layers of risk. It's kind of like an onion that we have to dive into it to peel those onions back. Residual income is the primary means for deciding a VA approval or denial. Residual income is based on, Dan talked about, there's your income. We have to back out FICA, Fed, expenses, housing expenses, credit card expenses, liability debt. What's left over is your net residual income. So VA uses a residual income process to determine if you're going to be a good candidate or not. And the residual income is a chart that we look at here in New England, and it's based on family size. So we have to look at the family size. We also have to look at the square footage of the house that you're looking at buying. We use a factor to calculate a maintenance expense. This all goes into calculating whether you have a sufficient residual or not to qualify for the VA loan. So it's not specifically just debt to income ratio, although that is a part of it. It's much more than that. VA is very, very, very conscientious about employment stability. I think Dan and Steve would both agree that probably not a good idea to go out and buy a house if you're jumping job to job to job to job to job, right? Something's going on there. And I think one thing that is not talked about a lot in the home buying process is what is your mental, physical, emotional readiness? Are you okay? Are we ready to buy that house? Because if you do experience a foreclosure, unlike a civilian like me, 5 years, 4 years, 3 years, I wait, I can buy another house, no problem. You experience a foreclosure as a veteran, you'll lose a portion or all of your VA entitlement and therefore not be able to use it a second, third, or fourth time. So it's important that employment stability and employment continuity is there. And what we can do sometimes for our younger vets that are transitioning out of active duty into civilian life is we can do what's called an MOS continuity, or what I call MOS continuity. If you are an MP in the military and you're transitioning into a law enforcement civilian job, that's continuity. You don't need to be in the job for one full year. We know that those jobs are going to be, pretty safe. The chance of getting fired probably very slim to none in that situation. So that's important. We talk about employment continuity and employment stability. Service-connected disability, if you guys are 10% or more currently receiving a service-connected disability benefit, you will be exempt from the VA funding fee. The funding fee is how the VA funds this. It's a self-funding guarantee or entitlement program that non-disabled veterans pay a funding fee, and disabled veterans are exempt from that. Again, a deeper dive, we can go into what the funding fees are. I teach a class, guys, an 8-hour class for mortgage professionals on VA. I've got about 15 minutes here, so I don't want to take up too much time, but we can do a much deeper dive in those, or happy to answer any questions that might pop up in our presentation today. What's nice about VA is if you've experienced a bankruptcy or foreclosure, you only have to wait 2 years, whereas a civilian, we might have to wait 7 years. So this benefit is designed to make the dream of home ownership a reality, even for some of our men and women of the service that may have experienced a financial hardship. Perhaps they weren't preparing like Dan had talked about and didn't save enough money, and now they're trying to get back on their feet. They've used that 2 years. They've worked with Dan, they've saved all this money, the foreclosures 2 years out, we can now explore the possibility of home ownership, right? So that's important. I get this a lot, post 9/11 GI Bill. Guys, if you are receiving BAH for post 9/11 GI, I cannot use that income for qualifying, right? We will not count that, but that is income, depending on your financial situation. That is a BAH is money that Dan might be able to put to good use, perhaps in an investment tool or a different investment vehicle. If you're not, guys, don't do this. Don't be that young vet that gets post 9/11 GI Bill that thinks it's cool making $3 grand a month and you go out and buy, an F-350, $750 a month car payment because it's nice, right, Dan? Not a good idea, right? So, because what ends up happening, guys, maybe you're experiencing mental, physical, emotional hardship, and you have to drop out of school. That BAH goes away, and guess what? From a credit perspective, if you've got a repo on that credit card, on that credit report of yours, huge hit for your credit scores. And number one, number two, that debt's not going to go away. I know some people say, well, after 7 years, it just disappears under the statute of limitations. But if you make one penny payment to that liability debt, restarts the statute of limitations all over again. That's why the collectors call you. That's why they keep hammering that phone. So 9/11 GI, post 9/11 GI BAH, use that to legitimately pay for your expenses of housing, or if you're in a position where you can cover that because you're working full time at the same time, have Dan use that money to save up to buy a house as one of your goals, because that's important, right? Collections, they're case by case, guys, but judgments, we have to pay those all off, all right? Big change, and I don't want to spend too much time, but the HR I'm pretty honored. I helped write some of the verbiage for HR 299, which was the Blue Water Navy Act. I helped amend the provision inside that dealt with VA home loans. Me, my team of Jeff Wilson and Ken Bates when I was president of NAMB. So what this means in a nutshell is the association of the VA loan to the county loan limits has been removed. So if you're a veteran and you qualify, you could buy a $2.5 million home here in Massachusetts with no down payment, no PMI, and it's phenomenal. So what's nice about the Blue Water Navy Act, it equilibrates the opportunity that veterans have across Massachusetts, New Hampshire, but specifically Massachusetts, where we have high-cost counties and low-cost, in non-high-cost counties. It's nice. Before, you couldn't take advantage of the VA loan to its maximum ability if you were in Middlesex County, and if you were in Worcester County, but you were in Middlesex County. So this equilibrated that and made it across the board, which was really nice. The other nice piece of HR 299, it made the funding fee the same for active duty and reserve National Guards. I always felt that active duty, the original funding fee was 2.15, but our National Guard reservist was higher, 2.4. I didn't feel that was appropriate. You both signed up to give your life for our country. So therefore, it should be the same. So this amended that and fixed it, which was really nice. Also, active duty members that have been awarded the Purple Heart, you are exempt from the funding fee on a VA home loan purchase. Previously to HR 299, you would still have to pay it. If you were awarded a Purple Heart, I don't think you should pay a funding fee. That's just my personal opinion on that matter. 2019, there were a lot of, there was a change to the VA cash out refinancing guidelines. You guys, if you are a veteran watching this, you are going to get bombarded. You are probably getting bombarded with unsolicited mail offers of this, equity access program. Dan's smiling because Dan knows what I'm talking about, right? And there's no such thing as a new VA equity access program. They just tell you that because it's just a cash out refinance, right? That's all it is, but they use these really cool logos and terminologies and to make you think it's this new program that VA has released, and it's really not. But there was a lot of predatory lending going on in the business, and so VA was mandated to make changes in order to prevent equity stripping, which are unscrupulous mortgage professionals that constantly refinance veterans every 6 to 9 months. And it is horrible out there. It really irritates me to no end. And I know that there's people out there doing it in my profession, and it gives me a bad name. So I get really honoring when I talk to these people or I see these mortgage professionals doing that. So what it says in a nutshell is that you can go to 100% VA cash out refinance, although your rate will be very ugly because we have to do what's called a custom pool now on those. VA acknowledged that and they said, well, fine. If you're going to do that, it's going to cost a lot more money. So they're trying to prevent veterans from going above the 90% loan to value. They'll still allow it, but you're going to pay for it. Now, the 90% loan to value is where you get your best rates. That's where you get your best opportunity. And I think it's important to understand that when you're doing a cash out refi, you should definitely be working with your financial planner to kind of get a good idea. Is this in my best interest? Am I paying off debt consolidation? Are there other ways to access the funds to do what I want to do? What's the interest rate on the home loan? What's my term? There's a lot of questions. It's just not, let's refi and call it a day. I think there's a deeper conversation. It's a three-dimensional conversation, not just let's take some money out and call it a day. I mean, we're doing a ton of these right now, but because of the changes in 19, I have to have a greater conversation to make sure that you're meeting one of these 8 net tangible benefits that the VA says, hey, something good has to be coming of this in order for it to make sense, that will allow the VA to go through the refinance. And there's the 8 net tangible benefits. Most of the time, if we stay under 90, you're going to be okay. But again, it's a conversation to have with Dan to say, hey, listen, is this in my best interest? And then sometimes Dan will loop me in and call me up and be like, hey, Rick, what's the rate? What are we looking at? And just a little FYI, guys, like you don't always have to do another 30-year fixed mortgage. Like people like, oh, I have to do another 30-year fixed. No, you should look at different varying terms. I can do a 29, a 28, a 27, a 26. I can do a 13. I can do a 19. So we can do any term mortgage we want because we directly sell to Ginnie Mae, which is who securitizes our VA loans. That might make Dan happy because if I can drop your rate, save you some money every month, but not put you back in a 30 and put you in a 27 because you've been in this house for 3 years, that makes Dan happy because we're not adding term to the mortgage, thus adding interest to your loan, even though the payment's going down. So we have these conversations because it's important to provide options to our consumers and our veterans especially. So some lenders only have the ability to do a 20, a 25, or a 30 because of the way that they're set up. Doesn't make them bad. It's okay, but it's a conversation that you should be having about your mortgage. And I think, looping Dan is very important. So there's like 8 of your net tangible benefits that we have to talk about. The interest rate reduction refinance loan, the EARL, guys, you're going to get, again, slammed with solicitation on these, most likely from your servicer. Just know that it's changed. You have to, there's certain provisions now. You have to have made 6 mortgage payments on your current loan. You must wait 210 days from the date the first payment was due before you can do an EARL. And there must, as you can see here, be a reduction in interest rate from fixed to fixed by 0.5%. So if I'm doing a 30-year fixed EARL, I can't reduce that rate by a quarter. It's got to be a half or more. So very important. We don't see a lot of fixed to arms. And the other big piece of this EARL revision that came out was the Senate Bill 2155 last year. there must be the proper calculations of recoupment on your VA IRRRL. So in a nutshell, and Dan's very good at this, is, hey, if your cost to do the refi, like I'm showing you, is $3,000 in closing costs, but you're saving $150 a month, your recoupment of the cost is 20 months. You meet VA guidelines, you're good. What some lenders were doing, it would take you 7 years to recoup it because they just want to do a loan. They just wanted to do a loan, and it was bad. So we're finding that right now we're not having an issue meeting the recoupment guidelines because the rates are so low. And in closing, some interesting facts here. There's almost 380,000 veterans in Massachusetts, but only about 7% are using their VA benefit at this time. So Mass has one of the worst utilization ratios in the country. And I think a lot of that is just poor education, poor outreach, not the state's requirement. I think that falls on the mortgage industry and the real estate professionals out there not talking properly about the VA benefit. And by the way, in Massachusetts, under Mass General Law, Chapter 151B, Section 7, veterans are a protected class in the Commonwealth. So therefore, it is illegal to deny a veteran the renting, leasing, or purchasing of a property solely based on their veteran status. And it's possibly a litigatable offense if the denial is based solely on the VA home loan, because the home loan is only available to veterans. So therefore, the inference can be made, well, if you're denying me the right to use my benefit, and it's identified as a benefit under the codified federal regulations, CFRs, one could infer that denial of a purchase based on financing could be discriminatory. So it's important to have that conversation, but there's a lot of people, obviously a lot of our veterans are not using the benefit. We have seen VA loans increase 340% since 2007, which is amazing. And prior to that, it was hardly ever used, right? You can use it for a condo. So guys, if you have someone tell you that it takes too long to do a VA condo approvals, I've done over 100 of them in the last 7 years. And sometimes it's taken only 12 business days to get them VA approved. And we go through the Regional Loan Center in Cleveland, Ohio. That's run by some really amazing people, and I happen to know them personally. And they're all about helping veterans get into properties that are affordable. And condos can be a great affordable option. You just got to know how to get those approved. So interview your mortgage professional and say, I'm looking for a condo. Do you know how to do this? If they're like, it takes 90 days to 120 days, they're not the right mortgage professional for you. It doesn't take that long. Houses do not have to be perfect. We do have to meet the VA minimum property requirements, but they don't have to be brand new. You can buy a Cape that was built in 1961 that's got a pink kitchen. It's okay, right? It doesn't have to be Better Homes and Gardens. But in Massachusetts, you're looking for peeling paint, missing handrails, what we call the 3 S's: safe, sound, sanitary. It can't be dilapidated, run down. This is not a sweat equity program. Again, I could do a 2-hour deep dive on VA appraisals, but just reach out to an experienced VA mortgage professional on that. The Massachusetts disability annuity, which Steve knows very much a ton about. If you're a 100% disabled veteran, you get the $2,000 annuity, $1,000 in August, $1,000 in February. I can use that income for qualifying for 100% disabled veteran because it's state funded, state mandated, okay? And in closing, guys, 2020, VA had their record year. 1.246 million VA loans were guaranteed between October 1, 19 to now for almost $375 billion in origination. Tickles my heart to know that we have veterans using them this much. So that's it for me as far as the 30,000-foot view of our VA home loan benefit. It took about 17 minutes. I apologize. But there's obviously a deeper dive to be had in a variety of different aspects of the benefit. And I'm just honored to be a part of this, and I consider myself a resource to help at any time. And thank you very much for having me.
Thanks, Rick. I do have a couple of questions for you. One refers to the issue of condos, which you've mentioned a bit. So the question is, what support do we have if we tend to utilize the VA loan in Boston, with the majority of affordable real estate being condos? I'm intimidated to start the process due to the hurdles you have to go through and hearing folks who have been unsuccessful.
You know, and the VA, you know, and again, Dan and Steve, both veterans, the military community is a very small, tight circle, and there's a lot of conversation amongst them, right? Oh, I had a terrible experience, and that spreads like wildfire throughout the group, right? Dan, Steve. So I think working with someone that understands the VA home loan process, the only hurdle, and the VA is currently making changes to the condo approval process in Massachusetts. There really used to be only two things that would negate a condo from being approved by VA. They don't care about the budget. They don't care about owner occupancy ratios. They allow mixed use. In other words, if you've got you've got a business below, but you've got units above residential, there's guidelines for that. But the two big factors that used to negate condos from approval, one, first right of refusal, right? Not very common in Massachusetts, very common in other states, specifically Florida. And what that means is the association says, oh, Steve wants to buy a house, Steve wants to make an offer in my association. The association has the first right of refusal on that offer, meaning, no, Steve, we don't want that. We don't want you. Now, personally, I don't know how they get away with that from an ACOA, from a discriminatory perspective, because I find that to be a very fine line, but it's allowed. They do that. The other one was a deed restriction that prevented veterans from renting out or the association would prevent you from renting out the unit. Inside the deed would be a restrictive covenant that would say, Dan and Steve, you cannot rent this unit at any point in time, or you need the okay of the trustees to do that. The problem is military are very transient individuals. And so purchasing or acquiring a condo and not being able to rent it could be problematic for a Dan or a Steve that just PCS from Boston duty station, Coast Guard duty station Boston to say Louisiana. That would jeopardize their VA benefit and say, well, wait a minute, you know what, I can't rent it. That's a problem for me. However, so that was the two original ones. VA has walked back their stance on the covenant pertaining to rental restrictions, okay? So now what VA says, it says, well, if Dan acknowledges in a letter, sort of like a hold harmless, that I know I can't rent this, but I really, really want it, and guess what? I'm out of the military. I'm not gonna be PCSing, right? I'm not transferring any place. I'm putting my roots down, like Dan said, I've come back to Mass. I'm out of the military. I want this condo. I understand I can't rent it, but that's not my intention anyways. So they'll let you sign a letter, an affidavit with a hold harmless, saying, I okay with this. This is fine, Mr. Veterans Administration, loan guarantee. Let's move forward. So when it comes to getting condos approved, you have to work with someone that understands all the documents that we got to get, how to submit them to VA Regional Loan Center in Cleveland, and then the approval process timeline. Like I said, it depends, but it could range anywhere from 10 to 12 business days. I've seen it take as long as 30. But so don't shy away. Do more research on who you're going to work with, that from a VA perspective. And I would recommend, there may be some great companies that are based online, right? I'm not going to say any names, but I would highly recommend working with a local lender, mortgage professional that understands the nomenclature, because what we call a townhouse in Massachusetts is a condo. That terminology in like Michigan or North Dakota, they might consider that as a single family. So it's important, but it's definitely manageable.
Okay, thanks. So we're nearing the end, but we have one more question again for Rick. Can a non-spouse domestic partner's income be considered for a VA home loan?
Only, that's called a joint loan. So traditionally, the only additional income to be allowed on a VA home loan application would be spousal income. Okay, so if you are not married, then what that is called a VA joint loan, and you can do that, but it will require a down payment of about 14.9%. And at that point in time, we can consider non-spousal income, provided that the veteran's income qualifies for half of the amount that was borrowed. So if the loan amount was going to be 300, as long as the veteran's income satisfies and qualifies for the $150,000, that's his portion or her portion, then yes, you can do that. But you will not be able to do the 100% financing with a non-spouse income. It'll require a down payment, and it's called a VA joint loan. You should be able to do some research on that and find some information online.
Thanks, Rick. So we're actually almost out of time. Before we go, we're going to launch our exit poll in a few seconds. So this poll, we really request that you fill it out. It helps us understand what works and what doesn't work with our webinars. And then once we're done, you're going to get an email. And if you've completed this poll, there's a link there to a SurveyMonkey. You don't have to go through the SurveyMonkey. This is just for anyone who has not completed the poll, and that will come up in a second. And I would like to thank all of our panelists, Steve, Dan, and Rick. It's been great. It's been extremely informative. And I feel like we've filled the hour, but we could have filled a few more very, very easily. So yeah, while we're waiting for the poll just to be done, if anyone has anything that they forgot to mention, that was a good time.
I was just going to say, like Rick said, thanks to the Office of Economic Empowerment, and great working with everybody. And yeah, if anyone has questions, feel free to reach out. I'm always happy to talk to another veteran, see and point people in the right direction if I don't have the right answer. So thanks everybody. Take care and happy holidays.
Thanks, Dan. Thank you everybody for joining us, and we're going to be done in a few seconds with the poll.